Welcome to another episode of Equity Street, where we provide the roadmap to property wealth. We're answering the questions of real estate investors across the country, and of course, I am joined by one of Australia's leading property experts, Matthew Bauer, to answer your questions. So let's get straight on into it. All right, this one comes from Paul, and he says, Matt, do you foresee construction prices to continue to rise? Smiley face, smiley face.
Yes. Yeah, Paul, it's a good question, and I think the short answer is yes, I do. I think it's inevitable that the pressure on construction materials and labour with builders at the moment is going to continue. It may not be as an acute supply shortage situation, but I think, given the volume of construction activity, both in the commercial sense and infrastructure projects, as well as residential housing, houses or apartments and townhouses, these supply and cost constraints are going to be with us for a little while yet, I think, and it's about being consciously aware of the upside and the risks involved in that. It certainly doesn't mean that you ditch brand new property as a strategy. It just means you need to be more vigilant and align yourself with the right team who, I guess, have the knowledge and expertise and I guess the commercial market power to negotiate the best terms possible for you and to mitigate as much, if not all of the risk, the majority of it, when it comes to construction cost price increases. And this is where it drills down into ensuring that the contract terms and clauses and timeframes involved are made well aware to everyone, in particular the investor, but also understanding what that could mean to your own personal situation. And we build in contingencies with regards to that. And I think it's important to also understand and have someone on your side to help negotiate that, with builders or developers, that it may not mean that the traditional fixed price 12-month contract is as readily available. Certainly is achievable, but we have to be realistic too in terms of, the frequency of price increases and raw material costs and labour costs that the builders are enduring. And if there's any doubt, or there's a sense that any of those guys are trying to discount their price just to win business, then typically that rings alarm bells as to the viability of that person and whether they're going to be able to fulfil the contract for you and not leave you high and dry. So these are all the factors that come into play. But I guess the upside there is, the value increase of your potential package if you have secured a property and it's 6 or 9 months or longer before construction commences or completes. High depreciation allowances for you as well. So there's always an upside to, I guess, any potential risk factor involved, irrespective of what it is, whether the construction prices are rising or starting to come down a little bit as well. So it's about just having the right person on your side to navigate those contract clauses to ensure that you're not put at risk.